Good morning, everyone. Welcome to the modern market, where every day we discuss everything to do with the modern market, that is the crypto market, the NFT market, and how to make some and or a lot of money, ideally, on the internet. Loaded up for discussion today, we have Ethervista ecosystem rips. The Vista token is up 85%. The Vista dog token is up 570%. The dog is always better than the native token itself. 20 CryptoPunks were sold last night as a whale buyer defaulted on their loans. Pretty cool story there. We'll explain all of that in just a little bit. And finally, CryptoKitties Egg pump continues. It was at a 0.15 ETH floor yesterday, surged to a 0.35 ETH floor today. That was just a free mint less than 48 hours ago. And we've also got the latest on price action on crypto and NFTs and some discussion on Paul Graham's influential founder mode essay, which has been going viral this week. Stay tuned for that. Today, Legendary is in the co-host seat and we're ready to get into it. But just before we do that, just a reminder, friends, that nothing, unfortunately, that we say is advice of any kind, financial or otherwise, because the market is very risky and we don't know anything for sure. So please do proceed with caution and exercise your own judgment. With that out of the way, Legendary, it is Tuesday. It is the 3rd of September. How are you doing? How are you feeling?
GM, doing quite well. Actually pretty happy with myself after we did the show yesterday where we had the CryptoKitties segment on the egg. I ended up buying a couple of them. And it, even though I was late at the like 0.15,
you shilled yourself the NFT via the show.
Basically, yeah, I did self shill the NFT for a nice 120% ish gain. So I'm quite happy because I've always been enjoying NFT plays more than anything else. It feels good that there's something to do on that end.
Do you know what? It's funny because I was literally thinking this morning, we're obviously reporting on a bunch of like aggressive, positive price action on both a couple of tokens in the Vista ecosystem and CryptoKitties today. And I was thinking, like, as a news show, I mean, occasionally we do research and occasionally we do analysis and insight. We do that too. But when it comes to headlines, we can't report as a headline like we think that a particular token's going to go up. And so usually a headline is something that you've probably missed, right? Like if something goes from a zero to $1 billion, like, and that becomes the headline because it's really noteworthy, you've probably missed it. So I was literally thinking this morning. I was like, that's kind of a shame. And that's why we do sometimes do like a specific segment where it's like, look, this isn't a headline yet, but we like this protocol, or we like, I don't know, just this is what's on our mind and what we're thinking about for the future. But it's kind of cool that you just took the headline from yesterday, just bought into it, and it also went up. So you hadn't actually missed it.
Yeah, I mean that's a fair point. I've been thinking about that perspective too. That we are basically quote unquote lagging with the like instantaneous plays when they become headlines, but it's still a very very good tool if you have plays that are more mid to long term. And even though long term in this space can literally mean more than 24 hours, so like 48 hours is enough. If you think that something has a life expectancy that's longer than a day, then we are not too late on that from the news side.
Yeah, I like it. And just as an additional bit of alpha, I wonder if you think this is true. I think a lot of the alpha in conversations, actually also, like, whether it's in person or whether it's in podcasts or shows, it's not necessarily in the main design stuff, right? Like I think you can read a lot of what people really think or what they say, like in the outskirts, like on the fringes. And it's kind of like how, I don't know, say you're at work and you go into a meeting, people behave a particular way when they're in that like formal aspect. But if you're chatting to them before or you're chatting to them after, that's where you get the kind of unfiltered uh, unfiltered thing. And I guess the goal with media is to be as unfiltered as possible when you're delivering everything. But there's moments where it's like, well, yesterday we reported on uh, Elon Musk's thing with Brazil at the moment, and so that's like a very formal breakdown of what the stuff is, and then you go into your viewpoints after. What do you think about that?
I'm thinking, what is then the equivalent of what you just said in terms of like the pre and post meeting chat in real life, in a real office, in on the timeline? Is it the comment section, or is there nothing like that?
I do think the comment section is good. Like, I think the comment section is awesome. Mainly to know what certain people are paying attention to, and the fact that they think that something is worth, exploring further or worth commenting on further. So I think the comment section is great. I guess maybe it's probably in DMs as well, and maybe private group chats at the moment. That's where things have migrated. That's my perspective.
Yeah, I think Kashmir had a very good point on that. Not on this show in the comments, but on another one where Kashmir said that they're operating with multiple X lists
Oh yeah.
for different segments. I don't remember all of them, but that this is basically the only way to go. And I think we've been speaking about like the algorithm a bit more over like the last week, and I'm one who's like very happy with the For You most of the time when I like keep reporting the stuff that I just don't want to see. But I definitely, now that I feel there's more going on, I need to get back into curating some new lists that I want to play around with.
Mm. Yeah, I think that's fair. Uh, Always keeping an eye on the algorithm. Let's turn our eyes and attention to the markets. As always, is coming to you from the snapshot, which is pinned up top if you're listening on Twitter Spaces. But we're also live on YouTube, streaming, as well as Twitter video as well. Starting with the price action of the majors, we have Bitcoin up just a percent at 58.9K. ETH is down almost a percent at 2.5K. Solana up 1.5% to $133. Getting into the headlines themselves, this Ethervista stuff has almost certainly hit your timeline. If you don't know what's going on there, we will break it down for you today. Ethervista value compounding deflationary currency and its ecosystem rips. So the Vista token itself is up 85% in the last 24 hours, up a huge amount from what it was 48 hours ago because it was just created recently. And Vista Dog, unsurprisingly, is up 570%. Some people have been describing this as like a ETH's version of pump fund. That is just like not correct as far as from what I've read. Sammy actually wrote, ETH DeFi users are frustrated, so they're looking for something to use on mainnet. The initial LP unlocks on September the 4th, so be careful as there could be a dump in price then. The UI is nostalgic, but I'll be monitoring the other features rolled out. So we'll break it down a little bit further as we hit that headline a bit later. The second headline for today is 20 CryptoPunks sold last night via an auction as a whale buyer defaults on all of their loans. It's a pretty interesting story shared by Punks OTC, so we'll share that properly in just a little bit and talk about some of the bad debt in the CryptoPunks ecosystem. And then finally, Egg NFT by CryptoKitties team continues to surge after the free mint up to a 0.35 ETH floor from a 0.15 ETH yesterday. Obviously, that was basically, it wasn't quite a free mint, but it was like $20 48 hours ago or so. So a real cook there for the people who are involved. Some notable sales from around the space. The X copy bot is still going crazy. This one that I'm showing on screen, if you're watching in, looks pretty sick, to be honest. It's an X copy Terror. It's sold for 50 ETH. Besides that, there was a Pudgy Penguin bow tie selling for 12.5 ETH and a CryptoPunk pigtail selling for 35 ETH. That is the price action and the headlines. Legendary, if you want to head over to the Mintify NFT marketplace, our NFT marketplace partner, to see what's going on there.
Yeah, absolutely. Downtrend in NFTs in the majors is still continuing. Bored Apes down another 1.6%, now sitting in at 11.86 ETH floor. Pudgy's also down a touch. However, they've been pretty stable. They're basically unchanged over last week and sitting at a 10.6 ETH floor. A similar story for Azuki's, down 1.6% over the last day, 4.8 ETH floor. But if you look back to the 7-day floor price, it is essentially the same. Miladies are continuing the downtrend a bit stronger, down 2.7%, 3.45 ETH floor, which still is almost 10% down over the week. In terms of other notable collections, we reported on Mockaverse that they are moving up and down quite a fair bit. They are up 6% again over the last 24 hours at a 1.71 ETH floor. However, still over the last week, they're still down 14%. And I feel like they have these, you can see it in the simple chart pattern on the bottom right of the screen that I'm currently sharing. They appear a bit swing tradey in a sense. And I'm wondering, with the volume that they are getting, which is not insane, it's like only 10 ETH over the last 24 hours. if that wouldn't be a place to like kind of, trade in and out of that collection a bit more frequently. But on the other hand, you can only do that with 1 to 2 mochas because the volume is simply not there enough to swing trade that. And for that reason, probably a waste of your time. But I don't know. I'm kind of feeling this, this craving that I want to swing trade and trade NFTs a bit more frequently. And even though I see like the chart patterns, then you look at the volume and you see like, it's just not enough volume going on in there.
I don't know if awesome update. I don't know if the lack of volume is a problem though. Like I actually think the lack of volume is a good thing at the moment because it shows that organic buyers are coming in, the wash trading is kind of gone. And I think these things can move with relatively little volume. Just a couple more collections that kind of caught my attention. Obviously, the egg we're going to talk about a little bit more, up 130% in the last 24 hours, showing this on screen for the people who are watching in on the stream, done by the CryptoKitties founders. We'll touch on that more later. We broke it down in full yesterday, and Legendary published that breakdown on his personal account. And then the other one is the Xcopy remnants, up almost 20% to a 6.6 ETH floor. These are all pretty cool. As always, I mean, Xcopy is obviously a very, very renowned, probably the crypto native artist that people think of when they think of crypto art. But I obviously report on these sales every single day, and the Xcopy bot has been going crazy, like absolutely crazy. People are picking up his known origin editions, picking up the one of ones, picking up the kind of even slightly bigger editions. That it's just insane at the moment. And if there's one, I think when people talk about like fine digital art, you've obviously got the generative side where people talk about Tyler Hobbs and Fidenzas and Chromie Squiggles with Snowfro. And I think those things will all do very well and persist. But I think the market, at least, is just saying that Xcopy is what the people want. Like Xcopy is what the people want right here, right now. That's my observation from that. Just wanted to bring that to attention to people.
Why
Any
do you
thoughts on
think
that,
that is? Why do you think that is? Is it just a concentrated effort of some larger whales to drive Xcopy prices? Is it just the winner basically of all the artists to buy out there and becoming representative for digital art in terms of NFTs? What's your hypothesis?
I think, do you know how I think about this? I think about this in terms of sports players. When you look back at previous generations, think of all the players that were, think of all the players that are around now, and think of how many will exist in people's mind share in 10 years, in 20 years, in 30 years. And I think very few will like persist outside of their generation. There were great players from the 90s, even not very long ago. How many really persist in people's minds? Whether in any sport, to be honest. Like, and when you think of the 90s, think of Michael Jordan, for example, in basketball. It's like, well, okay, there were loads of other great players also, but the one that like rises above all is this like one. And it's kind of like the power law principle that in the end, the winner just takes it all. And I think, yes, there will obviously be other great artists and there will be a long tail of other artists that forge fantastic careers in the digital art space. But there's definitely space for the one. Like the one is getting picked. And Cashman in the comments also pointed out that Raoul Paul has been kind of bull posting Xcopy stuff and buying a bunch. I don't know if they're all him necessarily, but he's definitely been one person on the timeline saying that type of stuff. But I think about it from that perspective, with that kind of thesis that yes, the power law exists in all aspects of life, and I think maybe him, Beeple, I don't know how many others, but someone is going to catch the bid most. And I think the market is just saying straight up at the moment that it's Xcopy.
Yeah, I think that's a very, very fair line of thought.
Okay, that's the headlines, some of the price actions, some talk on digital art. We've got a lot of headlines to get into for a bit, but before we do that today, our interesting discussion point for the day is from an article which Paul Graham wrote. Paul Graham is obviously a very, very successful investor. He's looked up to by many around the world when it comes to investing and kind of the formation of companies and providing analysis. on how to run successful companies and build successful companies. He'd produced this article called Founder Mode earlier this week, and it's kind of been going viral. A lot of people commenting on it. And I thought it'd be interesting to go through, given that I know that we ourselves are, young-ish entrepreneurs, and lots of people in the audience would be interested to find out, like, how do we go about managing either ourselves as a business or the company that we're actually running, whether it's as a content creator or as a straight up business. So I was thinking of actually reading through it because it was pretty interesting to me. And I think it would be helpful because it had an analogy of how the founder of Airbnb actually went about this. So I'm going to share my screen and go through it with people. It's not too long, but it's definitely a few minutes. So I'll do a little reading here. He said, it starts like this. At a YC event last week, Brian Chesky gave a talk that everyone who was there will remember. Most founders I talked to afterwards said it was the best they'd ever heard. Ron Conway, for the first time in his life, forgot to take notes. I'm not going to try to reproduce it here. Instead, I want to talk about a question that it raised. The theme of Brian's talk was that the conventional wisdom about how to run larger companies is mistaken. As Airbnb grew, well-meaning people advised him that he had to run the company in a certain way for it to scale. Their advice could be optimistically summarized as hire good people and give them room to do their jobs. He followed this advice and the results were disastrous. So he had to figure out a better way on his own, which he did partly by studying how Steve Jobs ran Apple. So far, it seems to be working. Airbnb's free cash flow margin is now among the best in Silicon Valley. So the audience at this event included a lot of the most successful founders we funded, and one after another, they all said the same thing had happened to them. They'd been given the same advice about how to run their companies as they grew, but instead of helping their companies, it had damaged them. So why was everyone telling these founders the wrong thing? That was a big mystery to me. And after mulling it over for a bit, I figured out the answer. What they were being told was how to run a company you hadn't founded. How to run a company if you're merely a professional manager. But this mission objective is so much less effective that to founders, it feels broken. There are things founders can do that managers can't, and not doing them feels wrong to founders because it is. In effect, there are two different ways to run a company: founder mode and manager mode. Till now, most people, even in Silicon Valley, have implicitly assumed that scaling a startup meant switching to manager mode. But we can infer the existence of another mode from the dismay of founders who've tried it and the success of their attempts to escape from it. There are, as far as I know, no books specifically about founder mode. Business schools don't know that it exists. All we have so far are the experiments of individual founders who've been figuring out for themselves. But now that we know what we're looking for, we can search for it. I hope in a few years, founder mode will be as well understood as manager mode. We can already guess at some of the ways it will differ. The way managers are taught to run companies seems to be like modular design in the sense that you treat subtrees of the org chart as black boxes. You tell your direct reports what to do, and it's up to them to figure out how, but you don't get involved in the details of what they do. That would be micromanaging them, which is bad. Hire good people and give them room to do their jobs sounds great when it's described that way, except in practice, judging from the report of founder after founder, what this often turns out to mean is hire professional fakers and let them drive the company into the ground. I'm going to stop there for a moment. The essay goes on. I'm going to scan to see what the best bits are to share more of. But Legendary, what do you think of this difference between founder mode and manager mode? Obviously, this is in relation to Airbnb, which is a significantly larger company than maybe even anyone who's listening in is either running or familiar with. But what do you think of this discrepancy between like giving people the agency to just go and hire good people and do what they need to do versus doing the small things that can't necessarily scale and taking more ownership as founders?
Probably go even a bit further and say there's like three different roles. One is actually founding a company, one is scaling the company, and one is managing a well-established company. Whereas I would say that between like the actual founding and the scaling, that is maybe closer together in terms of the role than the late stage managing. And it's true, there's not a lot of literature on that. I remember in business school, this was my focus was entrepreneurship, and this was a rather big topic during my master's. kind of pointing out that there's not literature on that, but kind of trying to establish those like three different roles. And it's something that a lot of companies or startups are struggling with, even acknowledging when you're transitioning from like having set up the initial structure, having founded the company, and then going into the scaling mode, which is often following a very similar shape, because often you want to have like some hockey stick kind of growth if you are a company that's interested in taking on external capital, VC funding, etc., and kind of be able to showcase that you have an influence over your user growth, revenue growth, whatever growth target is relevant to your company, so that you can credibly show to investors you have control over those figures and KPIs and you know how to grow. And even that differentiation can be a pretty tough one.
Hmm. I like the idea of thinking of, you know, thinking of companies in respect of like what stage they are at. I remember when I was a teacher, I did this management kind of course as well, and the what you realize is that the different types of leadership styles that are required for different types of schools was actually very different. So like if you were in a failing school, like the type of person that you needed to be the leader was one type of way, versus if you were in an outstanding school and everyone could be trusted, and you know you could execute with a different type of leadership style. And those two types of people wouldn't necessarily cross over. Like if you were really good at managing a great school, if you were placed into that terrible school and had to turn it around, you don't necessarily have the skill set to do that. And equally, the people who are great at turning it around and like getting this almost MVP school, like, look, this is just the things we need to do to get behavior in order and uh, make sure people know what they're doing. That doesn't necessarily translate to like, right, how do we make the school flourish? Like, it's got everything it needs. How do we make it flourish now? So I can see some parallels there. Funky's got his hand raised. Welcome to the stage, my friend. Would love to hear your thoughts on this founder mode essay.
GM friends. Yeah, that was a great take, BM. The school analogy, just having been an educator myself for 20 years, totally see where you're coming from. I just want to chime in as someone who is living the experience right now. Coming up on my second year with Lucky Friday Labs, I would still argue we're very still much in startup mode, founder mode. Our co-founders, they started their VC fund, which owns the operating company, the incubator, and they've been doing this for 25 years. They're serially entrepreneurs. I think they're very much in that founder mode in terms of how they treat us. You know, you hire the right people who just come with a certain set of skills. You give them a lot of autonomy and leeway to just go out there and make things happen. Just go add value to the company however you can. I'm sort of the company Swiss Army knife at this point and do a lot of different things and wear a lot of different hats, which I love. But I think there is also something to be said about the management mode too, because as we've grown and we don't have a huge team, we're all working globally asynchronous. It's tough sometimes to know when to step in and have to be the manager mode and take that role on versus just letting people have an unlimited amount of autonomy, because I will tell you that sometimes it can be frustrating when you're saying, hey, where's so and so with this particular deliverable or what have you. So it's a tension that I think that has to be navigated. And I think that they primarily stay in founder mode most of the time, realizing that having us as individuals with agency does turn up a lot of good things. And especially it's important when it's small and the company, we have like 15 people really. So I think as that company scales and you really kind of have to take on new people, there's also that element of forming the culture, which we could relate to being in a classroom, right? Be like, there's something to be
Mm.
said about the leadership in place and how that continues to create the culture as you scale, because that's where I think sometimes things will slip too far into management mode. And then you lose what made that place very special or magical, in those early days.
I like it, man. Appreciate the take. One thing that made me think of, Funky, maybe this is a question for Legendary. Like, have you noticed that like a different on some level, there's this idea that you're supposed to hire the good people and just let them do what they're doing. I guess the inverse of that is being a bit more dictatorial and saying just 100% what you need, and either getting your hands dirty yourself or being a bit more instructive to people to get it done. But I wonder whether the younger generation, and there's actually a funny story on this I'll tell quickly. Like when I was at Amazon on a 6-month secondment, I had this manager who was really, really annoying. Like one of the worst people I've ever met. I don't know if she still works there. Just terrible to be like really, but like, I don't know, maybe because I was slightly older at the time, because I became a lawyer like later in life. Maybe I'm from a generation where it's just like, you suck it up and take it. And then I was actually replaced by the next person who was much younger than me. And, you know, in this younger generation, I don't know if that type of leadership where, look, I didn't even like it, but I kind of accepted that style of leadership. They complained straight away. And within 1 month of her joining, the former supervisor was removed from her position as a supervisor because this person complained. And I was like, damn, why didn't I do that? And it's like this conditioning of like, I don't know if we're necessarily all built the same. Like, what do you think on that? Like when someone gets a bit more instructive and maybe even aggressive in their leadership style, is everyone able to operate in that environment? Who wins out in those circumstances?
I do think it's a generational topic. Definitely would agree on that. It's something I had noticed in the finance companies, especially like in high pressure environments in investment banking where I've been working. There, that you, I would say, like my generation, the millennials, they like would go there with, you know, the mindset that they're gonna have to take a fair amount of shit in that work environment. And I do think that is changing a lot. And I think where I probably see the most change, like from, or the strongest change from my perspective of being an Austrian, like when I served in the army, that was rather strict, and it's been even stricter the generation before me. And it's getting more and more lenient with the things they can force you to do. And it's less and less and less like, even for us, I remember nightly drills were limited to a specific amount of hours, and people were even back then complaining about that. And now it's even more limited what you can experience in the army, which what I still would argue is probably like one of the most disciplined places in a society that you can
Mm.
attend. And that is getting more lenient, so it's definitely becoming a generational topic. And I think what is increasing is the willingness of people to change jobs. Like if you think about, the generation of our parents, they probably would change a job like 2 to 3 times in a working career on average. And now, if you look at McKinsey studies, if you want to optimally advance your career, they are suggesting that you change your jobs, like I think on average every 2.5 years, and you
Mm.
basically can move up, move up, move up. And I had friends of mine working at Facebook, Amazon, and the related companies in Europe, mostly in Ireland or in the UK. And for them, it was like often you stay with Facebook until you manage to get your first promotion after 2 years. Then you try, if you performed very well, try to move to Google, skip another promotion step there, but just changing over,
Yeah.
working there for another 2 years until you get another promotion, and then go back to Facebook. That was just save yourself, 2 years by doing that, and
Yeah.
skip 2 steps on the career ladder. So it's definitely getting very, very different in how the younger generation, even our generation, is operating than the previous ones.
Yeah, I think it's fascinating. I think there's space for both. Well, I actually don't. I personally lean towards the dictatorial side, and it's funny when people even come in the spaces. Some people have said like, "What's going on here? Why is no one else allowed to talk?" It's like, well, we're trying to run a show, guys. That's we're trying to get through some important information. I kind of like it personally. But I think it completely depends what sector you're in, what kind of environment you're in. But I kind of like this segment, to be honest. I kind of like the idea of doing a bit of a founder mode every week or every month or so. I like this. I do recommend giving the rest of the article a read for people who've just joined us. It's the Paul Graham founder mode article, which has kind of been going viral this week, and that's why we did a bit of a discussion on it to try to consider, I don't know, just different leadership styles and how we apply to it, how we respond to it. Obviously, we're all working with a lot of people and want to try to work in the best way possible. So that's that discussion. Let's get into the main headlines for today. Ethervista, I think we've got to go there first, Legendary. I wonder, do you want me to lead this off? Are you able to speak to this? This is the token which has gone completely crazy in the last maybe 36 hours or so. Legendary, what do you think?
Yeah, I'm very happy if you want to set this one up. I do have a couple of thoughts on it though.
Okay, so I'm going to set it up by sharing 2 important tweets. Remember, we're streaming live if you prefer to watch, where I'm sharing this stuff. So Ethervista tweeted, well, I'll give you a bit of an explanation of what it is. In terms of the price action, let me just share that first so you know what's been going on there. It's at 17 million FDV now. It has pulled back a bit from where it was. I think it went much higher actually for a little bit, as high as 25, 26 for a while. Pulled back to 16, but literally didn't exist a few days ago. So it definitely has been a cook. They tweeted to say that it's time to explain how Vista works. If you're wondering what the hell it is, they said it's a value compounding deflationary currency. This is what it means. It means Ethervista is constantly auto buying and burning the token, increasing the floor price each time. This is a type of feature that Ethervista DEX renders possible. And so to date, 2.17% of the total supply has been bought and burned forever. Sammy, our legendary co-host, who will be with us tomorrow, wrote this thread, which the main account actually retweeted. So I'm going to go through that to give you the rest of the download of it. And maybe debunk some myths as well, because he starts like this. Ethervista is being described as the pump fund of ETH. ETH DeFi users are frustrated about the lack of innovation on mainnet. Ethervista's novel LP and fee mechanism aims to address this by exploiting an opportunistic gap in the market. He says they released their white paper 2 days ago. It promotes a fair launch with a liquidity lock of 5 days following analysis that most rugs take place between 2 to 4 days. It's pumped beyond 15 million market cap as a consequence. How does the fair launch work? 100% of the supply was distributed to the LP and locked for 5 days. Each swap takes a fee in ETH, which is distributed to the liquidity providers, and 25K was made available within the first 5 hours. So, and as we said already, it's kind of deflationary with the capped supply of 1 million. It's designed to reduce the token supply over time through burns, and 200K was burned the day before yesterday. Legendary, I'm going to stop there. What are your thoughts on this? Why is this getting so much attention? Feels kind of out of the blue to me. It doesn't seem like it is a pump.fun equivalent necessarily, or why do you think that's even being said? And why do you think it's similar or different? What are your thoughts?
I think there's a lot of complexity in how it works, and even more complexity to come with features that they want to launch if you talk about like flash loans, etc. But I also think it doesn't really matter for the average ape on the timeline, because you can launch tokens, you can buy tokens, you can make or lose money on that. So this is why I do still think that even though there's like, significant differences to how this and Pump.Fun is operating, I do still think it's a fair comparison to say it's the ETH quote unquote equivalent, maybe not, but it's like the ETH, call it alternative to that. Because the user experience in terms of what you're doing in, if you want to make money on that, is a very similar one. I do understand where Ethervista is coming from, that they don't want this quick pump and dump, pump.fun style like launches, and they're kind of trying to incentivize an extension of a coin's lifespan. But I also don't think that this changes the fundamental concept that with Ethervista, dog coins, etc., you're ultimately trading the attention that that token can get, even if you try to artificially extend that lifespan. And I feel like one of the criticism that Pump.Fun has been facing on the timeline relatively often was that they're like rather slow to ship new features. And that is potentially something, at least if you look at the white paper of Ethervista and the things that they potentially have in mind to do, if they're able to ship them faster, that could help them to win over more users. To me, the question is, and I think Sammy also talked about in his thread, is how the business model works in terms of the fees that Ethervista is making versus Pump.Fun, and if they basically have the better mousetrap with that extended lifespan, of the tokens that are being launched on their platform. And I think if they do, it could be, and it already is a highly profitable venture to build out from their team's perspective.
Interesting breakdown. I've just with some extra details. I think you mentioned the fees. $1 in every transaction goes to Vista devs. So it's not a dollar percentage based, but fixed amounts. That's from this tweet shared by Asflin. They're actually suggesting it's less like pump.fun because you have to create your coins contract yourself. They don't create coins for you. What they do is what they do provide is the launch function. So you can supply any amount of your new coin ETH. They'll give you LP tokens for their proprietary DEX. It's up to you whether you want to burn these LP tokens. They're not auto burned. So it's kind of like just providing a place to LPs something new that you created. Yeah. Any further thoughts?
Yeah, I think again that this this fixed fee that they're charging works very well now in the low GUI environment, because like you've been used to pay multiple dollars, 2-figure amounts. I mean, 3-figure amounts has been a long while for transactions, but you've been used to pay like 7, 5, $12 maybe for a transaction. Now that even the GUI trackers are changing to show you 3 decimals because there's so little price action going on. That $1 doesn't hurt, and I think we've seen a similar business model doing very, very well in this space, which is Zora, with what was initially the 0.0007 ETH fee for all the mints on their platform, and they still were basically able to say, yeah, it's feeless, because that dollar, in terms of like what you pay for a typical ETH transaction, most people would probably even not notice. But it turned out that they managed to get quite a few transactions and quite a few mints and make a heap of money with that approach. And if Ethervista obviously is trying to emulate something similar, they would love to see a very, very high transaction volume on the platform.
Okay. I like the take. Hope that little breakdown was helpful. Just a final point on it. It does seem like there's some ecosystem coins that are simultaneously ripping. We obviously mentioned the Vista dog token. It seems to be another one called Bonzi that seems to be a favorite. I think there's a Vista cat token also, obviously. So have fun, guys, in the Vista ecosystem. I wonder whether, to be honest, I have no view directionally on what's going on here. It just, I really don't know. It's just a bit of excitement coming to ETH, perhaps. I don't like the idea of copycat anythings, frankly. So like on that principle alone, if people want to style it as the pump fun equivalent on ETH, I think the pump fun thing is super successful because it's on Solana and because people really, really like it there. So I don't think you should take that concept and put it anywhere else. Or I don't think it will be as successful as the original. And I think we see countless examples of original protocols or original tokens doing well, and then you get a bunch of copycats after. And in general, I don't like the copycat style of, well, I always think the copycat will always do worse than the original, right? I think that's the principal point I'm trying to make. Let's move on because we've got a couple of other interesting headlines to get into. In terms of the CryptoPunk stuff, which was obviously a headline that I had put in the snapshot, this was pretty interesting. There were, I think people are looking at the biggest CryptoPunks auction in the last, well, I think the biggest CryptoPunks auction that's known. Punks OTC said this. Said yesterday was arguably the biggest punk auction ever. So now seems like as good as a day to share thoughts on how NFT auctions should be run. So just for a bit of context on what actually happened, he said 3 years ago, this particular account swept 100 punks. A few months later, he attempted to sell at Sotheby's, but was unsuccessful. A few months later, he began borrowing against them on MetaStreet and recently began defaulting on some of those loans. 20 of his punks were defaulted on over the weekend. So what happens when this happens, when you've kind of borrowed against the loan, is that those loans basically then go out to auction to see how much you can recoup of the money that has been lost, right? Because the loan has gone out to the borrower. The lenders are like, my money's gone. We need to try to recoup on the asset because they're not actually interested in holding the asset. So you need to go to an auction. So they were auctioned off individually last night. The 20 punks was sold at an average price of 27.43 ETH, which is, if we look at the CryptoPunks floor at the moment, those are okay. So the average is lower than the floor, but I guess that doesn't necessarily mean there weren't sales higher than that. 22 unique bidders placed 169 bids for a total of over 3,800 ETH, and 9 unique people bought at least one punk. 19 out of the 20 punks sold for or below our model's estimate, yet the average punk sold for 2.3% less than our estimate. We saw only 2 punks sell for 4% lower than our estimate. So this is pretty interesting. I guess the first thing to say is that it was interesting to see this model being run in a crypto native way to kind of get to take these assets to market. And I guess it's not entirely new necessarily in the sense that BendDAO works like this as well. It's not uncommon for auctions to be triggered when you have something that's defaulted. I guess what's uncommon about it is for so many to come to market all in one go. And I guess the bigger discussion here, Legendary, is I've seen like some animosity sometimes towards like Sotheby's and Christie's, and some people think, well, these are digitally native assets. Why do you need to go to those places to sell the stuff? Is it a status thing? Is it a liquidity thing? Like, surely it can't be a liquidity thing because these things are getting auctioned here, and maybe this is proof that it can't be a liquidity thing because you're getting the bids here, but maybe people think still that they can access greater liquidity at Sotheby's, or is there a bit of a status thing attached to that? What's your view on like where these auctions should take place best?
Yeah, that's a very good question. I think Sotheby's and Punks OTC had mentioned that, right? Even if the punks were sold 10% above Punks OTC's model, that basically Sotheby's fees would have been so high that the seller would have made less than going via this auction model. I think potentially it could have interesting tax implications to do it via defaulting on loans as opposed to selling directly. This is always an interesting play
Sure.
to go for that. I think Sotheby's can have multiple roles in that ecosystem and how it ties in, because what you get with, it's not necessary with CryptoPunks because they are well established and have the pricing model, and there's a lot of people who are sophisticated in trading them. But with other things, I remember that one person who had, I think it was an entire collection of Supreme box logo tees, and they
Yes.
tried to sell them at Sotheby's just to get the lot value on them. And I think they didn't follow through with the sale, but then managed to take out a Web3 native loan against them. And if you then default against that, that's certainly more tax advantageous. And you have the credible reference of Sotheby's saying, look, this lot is valued at this and that price point, and which will come higher because it's Sotheby's, and it gives you a better negotiation position, albeit not necessary with CryptoPunks because there's a lot of price data on chain about them already. But I would say with more exotic packages or lots, it could be an interesting play.
Yeah, that's a really interesting point. You brought up this Supreme lot. I remember the value was actually pretty high. I think it was at least 6 figures from what I remember. Potentially even higher. But I can't remember who I was speaking to about it, and they seemed pretty annoyed. Again, this is off my recollection. This is potentially fake news. I'm just saying what I think I remember. I would need to verify this. But I think the person ended up defaulting
Mhm.
and they didn't pay. And then apparently people were not happy with that. I can't remember if it was the borrower that was, the lender that wasn't happy, or the protocol wasn't happy. And my my thought on that is that the cool thing about this space, or the interesting thing about this space, is that because of the terms that you can get sometimes, these loans should really be viewed not really entirely as loans, but more like loan to buy. Like, these are loan to buy opportunities, and you should always be entering an amount which you are happy, like happy that if that person defaults, you are happy to take ownership of that asset. So I don't really understand the mindset which would suggest, you know, I'm giving a loan out and then they default, and now I'm really upset with the person for not paying back. Like, you absolutely have to be prepared as a lender that the person will default, frankly. And actually, to be completely honest, you should maybe even want them to default. Um, if you're also bullish on that particular asset, you want to be bullish enough about the asset that you're lending against to want to end up with it, I think. And it has to be at a price point which you think would be advantageous to you. Because I wonder if people are giving loans against assets that they're less comfortable with, that they don't want to hold it. It's like, well, that's a pretty risky loan to me. And so when I'm doing all the lending that I do, whether that's on Blend or in other places, it's on like usually the most premium of assets. And at one point that was CryptoPunks. I mean, it could still be CryptoPunks now, frankly, as well. But now at the moment, I'm doing a bunch with Pudgy Penguins, for example, something that I'm just like super happy with, a comfortable loan to value ratio. And it's just like, look, if this ends up in my hands, I am actually a buyer at that point. So that's my kind of perspective on the lending market. Legendary, unless you have anything else to say, we can move on to the next one.
Yeah, I remember that the value, and I double checked it, was way higher. It was actually 2 million for the Supreme, for the entire Supreme lot. But other than that, I very much agree. This is exactly the risk premium that you get paid. You earn interest on providing a loan for taking the risk that someone might potentially not be able to pay you back and defaulting.
I mean, no wonder why the guy's not happy. He paid $2 million for some t-shirts. Like, that's pretty savage.
Definitely paid way less than the Sotheby's.
Okay. Good stuff. We've got one final headline to get to in just a little bit, but let's hit the Web3 roundup first, get you up to speed with everything else that's been happening in the space in the last 24 hours. Number one, Athena, one of our favorite, not stable coins, one synthetic dollars, announced the season 2 distribution for their USDE holders. September 2nd marked the end of season 2, but I understand that the airdrop itself will happen in October. So that is that. They've passed $3 billion in market cap. So pretty good effort from them. Next, ETH2 base reached 14 million monthly active users yesterday. It was 11 million less than a month ago. That was reported by Milk Road Daily, but I saw a lot on the timeline raising a pretty big question mark about those numbers, wondering how many of those active users just means active wallets, and kind of raising a question of how many people are actually using this stuff. Next, Qatar announces digital assets framework to provide rules for tokenization processes and legal recognition for property rights for tokens. Next, Sky and Aave announced partnership to accelerate DeFi adoption. Remember, Sky is now the new name for MakerDAO. In a couple of other bits of news, Sui Network revealed Web3 native gaming device priced at $599, available in the first half of 2025. I thought that was pretty cool. And then finally, Yoshi Sodeoka Invasion Collection was placed with collectors before the main sale. This is happening on Verse, which is a gallery that I like a lot in London. Awesome to see some art stuff moving with a good amount of demand before the sale. Legendary, that is the Web3 roundup. We have 6 minutes left, and I think we wanted to touch on the quite aggressive price action in the eggs, the CryptoKitty founders eggs collection. You were a buyer yesterday. Do you want to just explain what happened in the last 24 hours, why you entered into it, what your thought is? Are you a buyer? Are you a seller here? What's your strategy?
Yeah, absolutely. Just updating with the current stats. Currently, back to a 0.31 ETH floor. The 24-hour volume, again, very, very good. 364 ETH the day before. When we had the show, the 24-hour volume was at 200-ish ETH. 10% listed, 30% unique holders, and a rather small collection with a bit more than 3K eggs. To me, the reason why I was buying in is FOMO. No, joking. It is a bit of FOMO, but it was also a bit of thinking in terms of the attention that CryptoKitties obviously managed to get on the timeline. and that they absolutely have the means and the budget to increase that attention, which is coming at a relevant time for them with the EVM compatibility upgrade for the Flow blockchain. Plus, that hints that they want to actually go back and do more with the CryptoKitties IP and the breeding and everything that has been going on years and years and years ago. And from that perspective, I was thinking that this would have the potential to go a bit higher. What had surprised me a bit is that this also has extended to the same amount to the rarer items in the collection, talking about the rare eggs, which are currently sitting at a 1.45 ETH floor. But we've also seen some of them being sold at around 2-ish ETH. So the rarity premium, I mean, admittedly, there's only 100 rare eggs, is absolutely there. It's also there for the uncommon ones. 600 of those exist at a 0.44 ETH floor. So the price action on the top end with the rare eggs honestly surprised me that they did go for the 7x of what already is a floor price that pumped like almost 40x from mint. But I did think yesterday when I bought in, I just got a couple of comments that they would have a good chance of doing well. With that being said, the market is different than it used to be. So I am happy to sell some of my purchased eggs back to the market and just pre-write the remaining few at basically zero cost.
Okay, let's be honest. What airdrop are people expecting here? Come on. Is this EVM compatibility thing something to do, like, if everything's turning into a chain these days, which it seems to be the case, does that mean there's some additional token that's coming? Or are people really buying these rarer eggs for 1.5 ETH because they really want the rare egg?
Token
They
question
want
is
to
a good
breed
one.
the egg. I swear we've seen breeding so many different times in different ways, and it never works.
Yeah, the token question is a good question to ask. Obviously, the Flow blockchain has its own token already, and that is up 6% over the last 24 hours. Not so much over the last 7 days, but there was a pump. It also went a bit higher. It went to almost 60-ish cents, where yesterday it was like at 55 cents, and earlier this week also went down to around, where is it, to a low of like 53 cents. So there's definitely been some token buying there. I personally would, I don't know. I don't think that they would release a token that has to do with the Flow blockchain. Francisca in the YouTube comments pointing out that they did make a post regarding a play to earn, so maybe an airdrop is incoming. That airdrop would obviously be more related to the CryptoKitties and to the gaming ecosystem that they've been building. But I wouldn't think that this would make sense to be in any way, shape, or form related as a secondary token to the Flow blockchain.
I mean,
Airdrop
frankly,
possibility with the game could be, but I also still think that just the fact that they managed to get that much attention on the timeline, that price pump, definitely helped extending that pump for at least another day.
yeah, you probably want that liquid token, right? Like, if it's something if it's something, and this is pure speculation we're going off here now, because one thing that's always been clear when you've tried to analyze NFT collections, when you turn them into market caps, they're just not as high as coins. Almost never the case. We've mentioned before, like, one of the things Mintify have added to their their site is the ability to click into collections and see the market caps of collections. So something as iconic and collectible with so much mindshare as Bored Ape has currently a $297 million market cap. When you think that something like PopCat has a higher market cap, and like there is just these other tokens significantly that are sitting way higher on the ERC20 side that are more fungible, you can see why, I don't know, if people are thinking that this is the CryptoKitty token coming via these eggs because of some play to earn thing, then it would make sense to bid up the NFT collection because the market cap is way less than what the token will be, all with the big caveat that you don't know how much is going to get distributed to you as NFT holders. And people do this all the time, where they make this assumption. It's like, well, the NFT is only this, the liquid the liquid fungible token will be way higher. It's like, well, only if they give you the amount that you think that they're going to give you, and you have to do those run those numbers in order to make a proper decision on that. But sometimes people don't. Legendary, final thoughts before we close out today?
Yeah, currently sharing the Mintify page on screen. Market cap for the egg collection is sitting at 2.3 million. Yesterday,
2.3.
Yeah, yesterday, basically, when we were doing the show at 0.15, that was a 1 million market cap buy that got basically all of the attention in crypto, and nobody would speak about that if it were only a meme.
See, this is my reaction is exactly the thing that people want. It's just like, what? It's only 2. And it's just like, it's kind of not relevant, because you don't know any of the mechanics of the airdrop. You don't know what the founder's thinking. You don't know how much is going to get allocated to particular types of eggs versus another. Like right now, how would you know to buy a normal egg versus a rare egg? Like you'd think, okay, well, there's a certain percentage of the collection is rare eggs. Maybe that will be loads better proportionally. Maybe that's what you're thinking. But ultimately, you don't know. But you're just looking at it saying, wow, 2 million, that sounds pretty low compared to everything else, which, to be fair, if you're comparing apples with oranges, yes, it is very low, but just know that you're comparing apples with oranges. Guys, that's been a fantastic show. We run a little bit over today. Hope you enjoyed it. As always, remember, we do this every single day, Monday to Friday, 7 a.m. Eastern time, for 1 hour. We're live on X audio in Spaces. We're live on X video and on YouTube as well if you want to watch in. Have a wonderful day. Take care, and we will see you tomorrow. Bye-bye.